Okay, recording this video on Sunday the 9th of October 2016, 7:27 AM Chicago time. Hope you had a good week's trading. Hope you're enjoying your weekend. Let us not talk about the election and Hillary Clinton and Donald Trump in this video. Could they get any more down in the weeds, dirty and disgusting, and away from the issues than they currently are? Good heavens. 29 days to go though, so hopefully we'll have some clarity and some answers soon enough. Anyway, this video, let's talk about the 5-step setup. So this is a pretty good video and article on the 5-step setup with the new multiple time frame version of the indicators that are now available for NinjaTrader and TradeStation. I am trying to be far more systematic in my trading rather than kind of discretionary. I'm taking trades based on what the multiple time frame system is showing me. And there's a 5-step setup for changes in trend. First of all, you've got to see volume divergence. Secondly, you've got to see price make end of trends or resistance on highest time frame. The first sign that you've got a change in trend going on is when you get a price break, and then the place to get in is a low risk entry point. And then you get confirmation when you have breaks on both of the time frames happening. So that's the 5 steps that is making up the setups. I'm going to roll through the day trading charts for Friday with the E-mini, where we had 2 very good setups and 1 setup that didn't work out, and then I'll roll through a couple of the global macro charts to show you what they're showing there. So first of all, 500 tip bar chart of the E-mini, continuous contract. This is the beginning of the day here. This is the more traditional view of the indicators with better momentum underneath the price bars, and we've got better pro-am here. This is the system view showing strength and weakness. Weakness and downtrends in white bars, strength and uptrends in red bars. And at the beginning of the day, because that's the open of the day, we had a nice little bearish divergence signal kind of setup. So that's step number 1 in the 5-step setup. Step number 2 is that we get end of trend or resistance on the highest time frame, and there we go. That's resistance on the highest time frame. We cannot break through up there. Number 3 is that we get a first sign of weakness, which is a break of supports here. That's number 3, and that's shown by the vertical dotted lines. And then the lowest entry points kind of come in here. We had a little bit of strength kind of going on here, so it signaled twice going on. So you're getting short around this point here and then taking profits when we have an exhaustion pattern on the way down. This little move here doesn't look like much, but that was 10 points from here to here. Really nice kind of swing trade move. Personally, I wasn't there. I had a little problem in the water on Friday, kind of not bust my nose, but I smacked my nose really hard against my surfboard when I was in the water. A lot of blood around, but hopefully no major damage done. If you've ever surfed here, Biarritz, this is southwest France, you know the shore break is really heavy. I got caught inside and took one on the head, and that's what ended up happening. Anyway, not going to feel sorry for myself. So missed this trade, but looked like there was a setup for a reversal trade kind of going on here. So again, the entry goes like this. Divergent pattern comes in, so it's a bullish divergence. Price plays out with pullback to end of trend. That's number 2. We get the first sign of strength, which is a red vertical break here, and a low risk entry point comes in after that. And that's where I went long. Went long 49 1/4 just here, and it immediately just gave way. We never got confirmation. It never broke into 2 time frames like this on the way down. That's a confirmation that you're properly in a downtrend, where we get another break after the lowest entry point, and then we finally break 2 time frames. So got taken out on my stop on the way down here, and you can see the blue professional bars took us through support, and this support was obviously the low of the day. I thought it was good because, you know, we had all these blue professional bars coming at the lows, and here the Rambo patterns where the amateurs got long too early, they got taken out on their stops. There's a little Rambo pattern there, so it was looking good for a reversal trade, but when the entry kind of came in, it immediately gave way, and I should have waited, I suppose, for a confirmation, but I'm not sure I would have even gone short at that point there. Anyway, it happened really quickly, taken out on my stop, and kind of lost 4 on the way down there, but sets up for reversal kind of later on. Bullish divergence comes in, number 1. Number 2, pullback to end of trend, so price plays out, that's number 2. Number 3 is the first sign of strength, kind of comes in there, bang. And you can either wait for the low risk entry point, or if you get a break, a double break like this happening, you just jump on board because this thing is strong and going up. So I was long 42 and a quarter, just in this little congestion zone, waiting for that break to the upside. Took out 7 points at 49 and a quarter into this move here. Soon as the exhaustion pattern comes in, I get nervous. I start taking profits. I was out there. There was a couple more kind of points into it, but that was me kind of done for the day. We've kind of had some weakness here, potentially setting up for another kind of reversal trade on the way down. Bearish divergence, price can't get through resistance. There's the first break into a downtrend, and the lowest entry points kind of come in. So we got 4 out of 5 kind of going on here, but you know, it's into the weekend, it's into the end of close of the day. You're not going to be trading, you should not be trading anywhere in the last kind of hour of the day, and that would be kind of crazy stuff kind of going on. But it'll be interesting to see how the market opens up this afternoon, Sunday afternoon in the US. So there we go. That's 5-step setups on the day trading charts. Now, 5-step setups on the bond charts. So global macro. I'm not going to go through all the global macro, but just to show you what's happening on a few of them. Talked about this earlier on. The end of last weekend it was, the bond market. So first step, bearish divergence comes in. This is happening around resistance on the highest time frame. We did play out pullback to end of trend, then we needed to make another support to resistance. So we've got a big resistance line kind of coming on the highest time frame. So that's number 2. There's the first break, number 3, start of a downtrend. Low risk entry point comes in, number 4, and we've got a break happening after that of support kind of going on. So that's almost confirmation. Confirmation will really happen when we start breaking support on the lowest time frame as well. But potentially on the 10-year, we're breaking into a downtrend, and that'll be really interesting on the way down. So the 10-year looks like this, the 5-year looks like this, the 30-year looks like this, but we've overshot a resistance on the 30-year, and so showing a little bit more strength. But these days the 10-year is really an important market for kind of showing what the government bonds are doing in the US. So let's see kind of how that plays out. If the money's running out of bonds, is it running into equities? And not totally convinced it is at the moment, but we're certainly seeing strength, you know, on the E-mini. So we've got all these red bars kind of going on. If you look back at the E-mini over all of these sell-offs happen with exhaustion sells, bullish divergence comes in on these spiky down bars, and then we keep playing to the upside. It's happened time and time again. Blue professional bars at the lows, at the lows, at the lows, at the lows, in this last move kind of down here. But you know, usually we don't hang around for long. We start breaking up through resistance, continuation of the uptrend, and so on, and for the time being we're just held underneath this resistance on the daily time frame of the E-mini. So a break above that, above 67, 68s, whatever, would show us that we got strength continuing on. We've only had the first step, you know, an exhaustion pattern on volume first. Yeah, we're playing around an end of trend on the highest time frame, but we busted through to the upside. So it's still showing as long as the as long as the resistance lines on each of the time frames continue to be broken to the upside. So we're breaking the highest time frame, breaking the lowest, and the intermediate kind of going on here. As long as that's kind of going on, that's still showing strength. A little bit of weakness here with breaks of support on the lowest time frame, but as yet, you know, nothing to show that we've got you know, a downside break in equities. If for whatever reason we break you know, 2100, the support here on this intermediate time frame is 2107. If we, you know, come close to punching through there, then I'll get kind of worried that we're, you know, falling off a cliff here after that exhaustion pattern and bearish divergence kind of coming in. But too early to say that there's something going on there on equities until supports get kind of broken. So bond market, it's definitely showing weakness and confirmed weakness, but the equities market not yet. Crude. I'm in too early on crude in terms of my view of the trend change, because we haven't got kind of confirmation, but that's okay. I'm happy with that. I'm playing RSX in the way up. You know, we've had our exhaustion sells bullish divergence. That's step number 1. Step number 2 is pullback to end of trend. Pullback to end of trend, it's not played out completely in this highest time frame, but it came damn close, and these supports are holding on the intermediate and on the lowest time frame here. So because those are holding, we're going to continue up. We might not make a complete pullback to end of trend on crude on the highest time frame, and we've had all these supports blue professional bars at these lows that are holding. You can check the crude chart for the setup for that. We haven't had a break into an uptrend yet. We haven't had a low risk entry point. Haven't had confirmation and so on. So it's a little bit early to call it a classic kind of trend change in crude, but definitely got the makings of something going on. The other kind of economic indicator which is really important is copper. And that we're starting to see almost a kind of a complete pattern here. So the exhaustion sells bullish divergence comes in here. We play out with, it's not a pullback to end of trend, but it was a resistance to support on the highest time frame. We got all our end of trends here on the highest, lowest and intermediate time frames happening here. So the support is holding. We've had our first break, number 3, step number 3 into an uptrend. We're just coming back. At some point we'll print that low risk entry point. Any breaks continue on the upside will be confirmation on crude, on copper. So copper's looking like it's going to break as well, and those two kind of going together would make sense. Kind of crude and copper would show economic growth and so on. Gold. Now gold broke into a nice uptrend. That was at the beginning of 2016. We had our pattern here. Exhaustion sells, pullback to end of trends, first break into an uptrend, low risk entry point, double break in 2 time frames. That's confirmed. Uptrend signal, but we ran into trouble. Bearish divergence comes in with flush patterns. We ran pullback to end of trend on the lowest and intermediate time frames, happening around resistance on the highest time frame. We did overshoot, but it did run into that end of trend there. We had all these blue professional bars on the way up there, and we had a low risk entry point. And we're breaking time frames again on the supports on the other time frames. So that's trend change happening in gold, and that we had some really nice. I think it was Tuesday was a really kind of strong breakthrough support there. So that was falling through the ice. But the low risk entry point was a ways away. It was kind of back here at 1340s up there. Not sure it's all over in terms of gold, just because we broke through the resistance on the highest time frame. Shows there is kind of strength going on. The next place down is support on the highest time frame. That'll really show us the way for gold and silver, whether they kind of hold nicely at some point between $1,000 and whatever 1250 in that zone. When that support on that highest time frame kind of comes in. If that holds nicely, then that'll show that we'll kind of get through 1400 the next time around. But for the time being, that strength and that uptrend is over. We're doing some damage on the downside until we find that support kind of area kind of coming in. Euro. Now I've been looking for the euro to kind of break into an uptrend and the dollar index continue on the way down, but it's not happened as yet. Again, just look at the chart. We're showing weakness kind of going on here. I know that we've had our exhaustion sell bullish divergence comes in, then it plays out number 2 pullback to end of trend on the highest time frame. Then we've had some breaks into uptrend, but all the low risk entry points have all failed at this point, and we've kind of broken back down to support on the highest time frame kind of coming in. We need these resistances, this one to be broken. 113 on the euro to be broken on the upside, and for this support to hold. If this support doesn't hold here, at 111, and you got to think, it's like, well, what's going on with Deutsche Bank? If there's some kind of calamity happens with Deutsche Bank, and the confidence in the euro kind of goes out of the market and so on. Who knows? That's close. 111 is going to be an important number for the euro. If this breaks into an uptrend, then that'll be the first sign that we got that end of trend, a reversal trade in the euro. But as yet, still showing weakness there and not getting any of those breaks into resistance. And I've been looking at these every time we come close, and I think, ooh, are we going to get that break? Are we going to get that break? And you can see, no, it's just not happened. We still got that weakness kind of going on in the euro. So, and it's the biggest component of the dollar index. So, those two are kind of related. We're seeing strength in the dollar index instead of weakness, but still too early. So let's wait and see. In the next this week we'll get some kind of resolution either way with the euro. Lastly, pound, and I said pound way too early to call a change in trend in the pound, and this is the flash crash Thursday night into Friday morning, where they whacked it down to 120, kind of down here, kind of recovered quite nicely. Big blue professional spiky bar. It formed resistance. Pullback to end of trend is what we're working out on this highest time frame. I know everybody's kind of down on the pound and Brexit and whatever, but this is the kind of activity that you need in order to bottom a market. It'll take a long time to prove itself and so on. We're still going through that kind of crazy phase of big ranging blue professional bars and big exhaustion patterns and so on. This next one will probably be a flush pattern that kind of comes up kind of around here, but it does point to 120 as being an important level kind of going forward. So let's see where this kind of plays out over the next coming weeks and months. But and the market will take forever to bottom and kind of prove itself, but let's just kind of wait and see. But it was an interesting thing. So there we go. That was the 5-step setup that I'm using to be more systematic in my trading. Hope it was helpful to you, and looking forward to day trading next week.